Hey everyone, welcome back to Corporate Decoder. Today, Eagle Point Credit Company Incorporated ECC just filed a post-effective amendment, and I am seeing a significant change in their corporate structure. Quick note, this is not financial advice, just my take on public filings for educational purposes. They officially converted from a corporation to a statutory trust, which is a big deal for how they are legally organized. This filing, dated May 22nd, 2026, details a major change for Eagle Point Credit Company Incorporated, or ECC. They have officially converted from a Delaware corporation into a Delaware statutory trust. This is often called a corporate conversion. They are now operating under the name Eagle Point Credit Company, and this change was made effective on May 22nd, 2026. This move means the company's legal structure has fundamentally shifted. Think of it like changing the foundation of a building while keeping the occupants the same. All the previous filings and information are now considered part of the new entity, the trust, for regulatory purposes. This keeps everything continuous with the Securities and Exchange Commission, or SEC. What this means practically is how they refer to themselves. Before the conversion, they were Eagle Point Credit Company Incorporated, and now they are Eagle Point Credit Company. If you see we, us, or our, it refers to the company and its subsidiaries. This ensures that even though the legal form has changed, their business operations and reporting remain connected and understandable. The good news is that this conversion is largely a structural change and does not appear to alter their core business strategy or financial reporting as detailed in previous filings. Because it is a conversion, the CC lets it become effective right away, which simplifies the process. Now, let's look at the financial statements that are part of this filing. They've incorporated their audited financial results for the period ending the 31st of December 2025. This gives us a snapshot of their financial health right before this big legal change. We are looking at their consolidated statement of assets and liabilities, their consolidated schedule of investments, and their consolidated statement of operations. They also include a consolidated statement of comprehensive income, statements of changes in net assets, and a statement of cash flows. Digging into the financial highlights for the year ending the 31st of December 2025, Eagle Point Credit Company Inc. reported a net asset value per S-share of $17.35. This is a key metric for investment funds like this, showing the value of each share. The net income per share for the same period was $1.23, indicating profitability. Total investment income for the year was $12.9 million. This shows a substantial amount of earnings from their investments. Looking at the statement of operations, their total investment income was $212.9 million. This is the money they earned from their investments. Expenses, however, were $77.9 million. This means that after paying their operating costs, they had a net investment income of $135 million. This is a strong positive number, showing they are making good money from their core business. On the balance sheet side, their consolidated statement of assets and liabilities shows total assets were $2.7 billion at the end of 2025. This is a very large sum, indicating a significant investment portfolio. Total liabilities were $897 million. This means they have debt or other obligations to pay. The net assets, which is what is left after subtracting liabilities from assets, stood at $1.8 billion. This is the book value of the company. Among the exhibits filed with this amendment, we see the form of Certificate of Trust. This is the official document that legally establishes them as a trust. It is a crucial piece of the conversion puzzle. Alongside the Certificate of Trust, they've also filed a Declaration of Trust. This document outlines the rules and governance of the trust itself, essentially its operating manual. We also see several supplements to the Declaration of Trust. These are important as they detail specific classes of preferred shares. For instance, the supplement for the 6.50% Series C term preferred shares due 2031 indicates a specific type of investment they offer with a fixed interest rate and a maturity date. Similarly, there is a supplement for the 6.75% Series D preferred shares. These preferred shares typically offer a fixed dividend and have a place in the company's capital structure, often before common shareholders. There is also a supplement for the 7.00% Series AA convertible perpetual preferred shares. The convertible aspect here is key, meaning these shares can potentially be converted into common stock under certain conditions. Perpetual suggests they do not have a fixed maturity date, offering a more permanent source of capital. And another for the 7.00% Series AB convertible and perpetual preferred shares. Having these different series of preferred stock shows a strategy to raise capital from various investor types with different risk and return profiles. They also updated their dividend reinvestment plan for their common shares. This plan allows shareholders to automatically reinvest their cash dividends into buying more shares of the company, which can be a good way for long-term investors to build their position, and an updated plan for their convertible and perpetual preferred shares. This shows a continued effort to provide mechanisms for shareholders to reinvest their distributions, which can be attractive to the investor base. Looking at the number of holders of their securities as of May 15, 2026, they have 16 holders for their common shares of beneficial interest. For their preferred shares, we see numbers like 1 holder for the Series C, 1 for Series D, 98 for Series AA, and 4 for Series AB. They also list 1 holder for unsecured debt. This suggests a relatively concentrated group of investors in their debt and preferred stock, which is typical for some types of funds. Here is something important in Part C, Item 30, regarding indemnification. It details how the investment advisor Eagle Point Credit Management LLC, its officers, managers, and affiliated individuals are entitled to be indemnified by the company. This means if they get sued or face losses while doing their job for the company will cover their costs, unless they acted with willful misfeasance, bad faith, or gross negligence. This is a common clause protecting fund managers. Similarly, the administrator, Eagle Point Administration LLC, and its affiliated parties also receive this indemnification protection from the registrant. This ensures that the service providers can operate without undue fear of personal financial ruin from their professional actions, as long as they are acting in good faith. In terms of expenses, they are deferring the SEC registration fees, meaning they will pay them later on a pay, as you-go basis. This is a common practice for companies making continuous offerings. Other fees like FINRA filing fees, New York C listing fees, and printing costs are noted as being calculated based on the securities offered and the number of issuances. This means they cannot estimate these costs precisely at this moment. These will be detailed in future filings as offerings occur. Item 28 talks about subsidiary companies. Eagle Point Credit Company Sub, a Cayman Islands company, is a wholly owned subsidiary. This is common for investment funds to use offshore entities for various financial and legal reasons. They also have Eagle Point Credit Company Sub 2, another wholly owned subsidiary in the Cayman Islands. The inclusion of these subsidiaries in their consolidated financial statements as of the 31st of December 2025 means their financial performance and assets are combined with the parent company's reports. And they have Eagle Point Credit Company Sub 2 US LLC, a domestic subsidiary in Delaware. Having both offshore and onshore subsidiaries is a typical structure for companies operating on a global scale or managing complex investment strategies. Finally, their records are maintained in a few key locations. The primary office is at 600 Steamboat Road, Suite 202, Greenwich, Connecticut. This is the main administrative hub. Their transfer agent and trustee for common and certain preferred shares is Equinity Trust Company, LLC, located in Ridgefield Park, New Jersey. This entity handles shareholder records and the administration of certain debt instruments. For their other preferred shares, the transfer agent and custodian is Computershare Trust Company, NAE in Providence, Rhode Island. This is another major financial services firm that handles record keeping for a vast number of companies. And importantly, their investment advisor, Eagle Point Credit Management LLC, is also located at the same Greenwich address as the registrant. This signifies a close operational relationship between the management and the fund itself. So, to wrap up, Eagle Point Credit Company has successfully transitioned to a trust structure, a move that should not fundamentally alter its operations but clarifies its legal standing. Financially, their 2025 results showed robust investment income and net assets, indicating a healthy business. They've also taken steps to organize their governance and issued various preferred shares to diversify their capital base. The structure with multiple subsidiaries and clear agreements for their advisor and administrator is typical for a fund of this nature, providing clarity on operations and risk management. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. The Discord is in the description.